So hey guys, welcome to another video presented by Bitcoin Hitpoint. My name is Fahad, and before we get started with this video, let me quickly give you an introduction about this one. What are we going to cover in this particular video? So in this one, we will be talking about how you feel lost in different kind of trading scenarios. So let's say if the market has started to quickly pump or it has quickly dump and you feel lost, that how are you supposed to trade this kind of markets? So those are different kind of scenarios that you go through and you might feel lost and you do not know how you want to trade in those kind of scenarios. So in this particular video, I'll try to cover 3 different types of trading strategies which are more of entry point for you. So if in scenarios where you feel lost, you can consider using this. So all 3 of the topics that I'll be talking in this particular video are completely different. They are completely different in their nature, in their entry barriers, in their parameters, and everything that I'll be talking about will be different. So any of this which you find interesting, which you find is helpful and is easier for you to pick, you can go with those ones. All right. So the very first pointer that I have for this video is about FRVP. So I have made a very dedicated video about FRVP just on this channel. So if you are interested in learning about how you are supposed to use FRVP, how does this work, you can consider watching that particular video. Alright, so let's get started with the very first entry point, which is about FRVP. Now you guys already know about a strategy called as breakout and retest. Alright, so that is a very old school kind of trading strategy. Now if I just have to give you an example, let's say the market was in a range for a very long time. It gave you a breakout, back tested the range, and then continued the push towards the upside. Now this is something which each and every one of us already know. But then there is also another scenario which I'm very sure you guys do not already know. At least most of you did not know about this. I've been watching you guys on the live streams. I've been watching your chats and everything. And yeah, I found that this was something which I should definitely cover on my dedicated video. So just to give you an idea, what does this FRVP strategy would look like? So you need to find out a local push that market gave. Alright, so this particular strategy that I'm going to be talking about works in a trending market only. Alright, because breakout and retest usually works in a range bound market. But when you are going to use this FRVP strategy, you want to see a trending market. Alright, so you want to see a local trend. Alright, so a local push either towards the upside or towards the downside. So let's say we had a local trend right from this point till this particular point. Alright, so if you mark that like this as your starting point of the local trend and this as your highest point, you see you had your POC. Market just back tested the POC and then continued the push towards the upside. Now this is a very good example of those range bound market where you see that market formed a range, you got a breakout towards the upside, you back tested the range and then continued. Alright, but you are never sure that how long a range bound market can stay in a range bound, but a trending market has a higher chances of continuing the trend in a particular direction. So this is one of those tools which you can definitely use when you miss an opportunity of entering into a long trade at the bottom or miss an opportunity of getting into a short trade at the top. So this tool can easily give you a re-entry in that trend and then you can just ride with the trend. Alright, so it is a very interesting strategy. I personally use this a lot. Obviously you want to have a lot of confidence with a particular level. You do not just want to trade one level. I personally at least like to see 3 levels around area, and then I mark it as a zone and then I look for any kind of confirmation to get into this trade. Alright, so this is your strategy number 1, which is called as FRVP strategy or whatever you like to call it, because this is something that I have made it on my own. So I'll probably give it some fancy name during my live streams. You guys can consider joining the live stream which I do every day at 10 PM, and there are multiple live streams that I do on this channel, so you can join that and ask your questions if you have any, or just drop them in the comments and I'll love to answer them. So let's quickly have a look at second example as well. So here we have another great example. Now I'm doing this on a 4-hour time frame. You can consider this on any kind of time frame. I would recommend being at least on 30 minutes and above for this to have a higher accuracy to play out. So another example that I have here is a local uptrend that we had on Bitcoin. So if I just mark the local point till the highest point, let's say we were around this area, the market gave you another push and then back tested the POC and then just stayed range bound. But even in this kind of market condition, you were able to capture a very good 8% move. So you see the accuracy and the result that this particular tool can give you is insane. Also, just for the sake of example, if I cover the whole trend that we had, like right from the bottom till the top, if I just mark this, and if you see that POC level, we just tapped the POC level, got a very interesting confirmation and then continued the move towards the upside. So this was another 8% cover if I'm not wrong. Yeah, almost a 7.75%. So this was a great move, another towards the upside. So This is a very great strategy which you can consider using in a trending market. So you want to see either a local uptrend or a local downtrend. You want to trade the POC, but then it should be in confluence with some another level as well. So that would give you another great accuracy. Just for the explanation purpose, I made sure that I'm talking a lot about POC and how you're supposed to use your FRVP. But this is a strategy which you would like to use with different kind of confluence. Strategy number 2, according to me, is more of a confirmation trigger for you guys, because as I know, everyone who usually starts to trade starts by marking normal support and resistance levels on the basis of observations. But then everyone can mark a support and resistance no matter if it's right or wrong. But yeah, I'm sure that you are capable enough to mark a level like this on your charts. You can easily do that. You can place it here, you can place it as resistance. So everyone knows how you are going to mark your levels. But then the majority of you guys are always confused with how you would enter into a trade. What could be your trigger point? So for that, I talk a lot about an old school method, which is the only old school method that I like for entry, and that is completely on the basis of price action, and that is about pin bar. So it can either be a negative pin bar or a positive pin bar. So positive pin bar is obviously green and negative is red, and I would like to see those kind of pin bars if I'm just trading on the basis of price action, because personally I also use Footprint. I like to go with order flow for confirmations. I'll quickly talk about that as well, that how you can be using Footprint for your entry confirmations. But then yeah, the second pointer that I have for you guys is about pin bars as your entry confirmation. So if you are capable enough of marking your support and resistance levels, personally I do not like to mark levels like this just on the basis of observation. And anyone who has been watching the stream for some time now, you guys already know how I mark my levels and what kind of levels I mark. They are always data backed rather than assuming that I have a support level around this area. I would like to have certain kind of logic for me to believe that okay, next time when the price retraces in that area, I might get a good confirmation for me to trade into that area. If you are interested in learning about that, you can definitely consider CMM, which is called as Crypto Market Mastery. The link will be given in the description and you can definitely check it out. But yeah, so as I was talking about this pin bar as your confirmation, you can always mark your support and resistance level. As soon as your price reaches your level and you get a good positive pin bar, this is definitely a great entry trigger. Now let's try to break it down. Again, this is on a 4-hour time frame. You can be watching for your entry triggers at anywhere around 15 minutes, and lower is fine as well. But then if you are a beginner, I would recommend that staying on 15 minutes would be a good idea. So what does a pin bar mean? I'm sure you guys have already heard about pin bar. A lot of people talk about it. But then let me explain you why pin bar is a good setup. Why does it make a lot of sense to trade pin bar? All right. So talking about pin bar, if a candle looks like this is called as pin bar. So if I just mark it for anyone who is watching for the first time and does not know what pin bar looks like, this is what a pin bar candle would look like. All right. So since you get to see a pin bar on your level, what does this signify? A pin bar consists of two things. Obviously, like any other candle, it consists of a body, which is this, and then a wick, which you can see on the bottom side. So this wick signifies that on the level, which obviously I suppose you marked a very important level on your chart. So as soon as price came to your level, it just gave a fake push towards the downside where it manipulated all the sellers to get into the market. Everyone started selling, but then the market closed above your important level, which shows that you have now trapped all the sellers at the bottom. Market is showing a good strength. It closed green. Obviously it opened here and then closed above the opening, so that's the reason why it closed green. So the market is showing a lot of strength here, and that's the reason why it is a very good trigger point, because you have already captured a lot of trap traders at the bottom. Market has closed green. This can be a great trigger point for you to enter into this trade. Now if this is happening on 15 minutes and above that, it's a great sign. If it's on a smaller time frame, it can be a manipulation move. Second most important point when you are using pin bar is that you always want to trade it on a level. You do not just want to randomly trade a pin bar. So this was a random pin bar. Let's say we did not have any level here. So you do not want to trade this kind of levels into buying or selling. All right. So you do not want to trade this kind of pin bars. But then if there would have been a pin bar at the top, all right, let's say if you had a resistance area around here, If you see a pin bar forming on your resistance level, on your support level, only and only then you are supposed to trade. Do not trade random pin bars, because again, you want to take high probability trades only. So we just discussed about how pin bar looks like, how does it function, what does it signify. So now the third pointer that I have for you guys is about Footprint. I'm sure most of you guys were excited to learn about Footprint. But then in this particular video, I'll be talking about what can be one of the trigger points that you can use if you are going to use Footprint. Then again, this is going to be extremely basic, so I would not make it a very complicated or something that you guys do not understand. So anyone who's using TradingView, if you have a premium version of TradingView, you can use Footprint right from this area. But if you do not have a premium version of TradingView, you can consider getting different kinds of softwares as well, which are in the market, which can be any software. Personally, I like to use ExoCharts if I'm not using TradingView. But then yeah, since TradingView has pretty accurate numbers right now, I just stick with TradingView's number itself. Alright, so let's say if you have Footprint charts and if you want to learn about at least one pointer which you can use for entry, I would like to recommend using imbalances that Footprint shows. Alright, so I'll quickly turn on Footprint for you guys. So this is what Footprint would look like in the beginning phase when you mark it. You'll obviously have to zoom into your charts to see the numbers. Right now, I'm not going to be talking about the numbers because that will just make your video and your understanding a lot more complicated. So I'll talk about the imbalance. What does imbalance mean? So in general term, imbalance occurs when something is a lot more than something else. So let's say the quantity of Y is lot more than X. So there is an imbalance between X and Y. If X is 1 and Y is 1, that is balanced. But if X is 10 and Y is 3, that there is definitely an imbalance, right? So similarly here you can say X was sellers and Y was buyers. So if X are 10 and Y is 2, there is a selling imbalance because there are more sellers than buyer. Alright. But if there are 10 buyers and just 2 sellers, so there is a buying imbalance because there are more buyers when compared to sellers. Alright. So that is what our imbalance would look like in trading perspective if you are using volume Footprint. Now, how do you identify where there is an imbalance and where there is not? So that is not something which you'll have to do manually. TradingView just does it for you. Alright, and any chart that you are using, be it any different kind of softwares, most of the softwares will highlight the imbalance for you itself. Alright, so your TradingView does it for us. So you see this blue markers on your chart. Alright, it's not in front of every number. So these blue markers are what you call as imbalance. So now how are this imbalance calculated? Why is it just at this area and not anywhere around this? So when there are 300% more buyers when compared to sellers, it will be marked as blue lines. Alright, so this is why it is called as buying imbalance. When there are 300% more buyers, you can obviously customize this. You can make it 100% or 200% or 500%. Personally, I like to keep it at 300%. So if you just keep it at 300%, this is what your buying imbalance would look like. Now you see a red line. This is where a selling imbalance occurs. So you see the numbers 86K compared to 15K. Usually you do not compare it to the numbers right in front of it. You are supposed to go zigzag. But then again, as I said, it will make the video just complicated. I just want to keep it about the entry triggers. Alright, so that is how you look at this chart. The red line shows that okay, there are 300% or more sellers compared to the buyers currently at that particular price. Alright, so that is what our imbalance would look like. You have your lines visible in front of the prices where there is a buying imbalance or where there is a selling imbalance. So what you need to do is just zoom out of the charts and see where there are maximum number of imbalance. So let's say we are trading somewhere around this area, alright, at anywhere around 96,950. We are just trading around this area, and then we are looking for a very good support where we can get into a buying opportunity. Let's say our bias is bullish. We want Bitcoin to keep the pump continuing towards the upside. What we can do is we can look for buying imbalance, because we do not just randomly want to get into a trade. We want to get into a zone where there were a lot of institutional buyers or where there were big players whose buying orders are yet to be filled. Alright, because imbalance shows that, because there are still some orders which are not yet filled. You can just say this is your order block, but with a logic rather than just assumptions that okay, this might be an order block or this might be something where bigger institutional players would have not entered or something like that. So that BS is not what I like. I do not like assumptions in my trading. I like to see numbers. I like to see data which back my logic or back my trading analysis. All right, so no offense to the ICT guys, but then again, order block is BS. All right, so I can just mark this as majority of the imbalance is right around this area. I like to extend it to the right side, and if I get back to normal candles, this is what you see. All right, this is exactly what you see. A very great push of almost 9 to 10%. You see how strong these strategies are, how strong this entry triggers are. Now you see a very great, a very clear sign that market came into your level, it closed above it, it trapped all the sellers at the bottom. Now again, you are not just assuming that the sellers are trapped at the bottom. All right, you are not assuming that. You can just, let's say we can switch to 15-minute time frame, going back to our zone of interest. So I like to call my levels as my zone of interest where I'm looking to get into a trade. Now you are easily looking at this. I'm on a 15-minute time frame. I'll just quickly go back to the volume footprint chart. Alright, so I'm in front of the volume footprint chart. I'll just zoom in at the bottom where we got reversal from. Alright, so if you just look at the bottom, there are negative delta only. Alright, negative delta. There are like more than 840, 850k negative delta right around this area. A lot of negative delta right around this area itself. Alright, so if there were only sellers in this area, how were we able to push the price towards the upside? Like if there were majority sellers. So volume footprint makes it extremely easy, extremely clean and clear for you that okay, sellers are actually getting around this area right at your zone of interest. So when you see a trap happening right at your level, it is going to give you a very good confirmation, a great confidence to get into a trade and then ride the wave towards the upside. So these were the 3 pointers that I wanted to share with you guys. Again, I'll try to keep it as simple as possible. Obviously the third pointer, which was about volume footprint, was not for beginners because again it needs some understanding for you guys how volume footprint works, what the data looks like, what were the different numbers, how you were supposed to trade them. So if you're interested in learning about that, I obviously have a dedicated program around volume footprint. You can learn everything right from a beginner's perspective till your advanced level kind of trading. Because institutional players, they do not mark supply and resistance or support and demand just randomly and get into a trade. That is not how it works. If you are trading on a 1-minute time frame or a 5-minute time frame and then you think that okay, you are going to capture bigger moves, yeah, you might capture that, but then let's be honest, how many times have you done that? But it's tools like this which helps you understand where the market makers are entering, where there is a manipulation, where there is a clean and clear confirmation, and then you can just ride with the trend. I use different kind of advanced softwares and tools, but then again they are just advanced and not complicated. If you have someone who can teach it to you in simple terms, be it me or anyone else that you want to learn from, these tools are not complicated, but then yeah, it's advanced. You want to learn it right from the basic. So that is what I had to say about volume footprints and my 2 other pointers, which were about the pin bar and the other strategy which was related to FRVP. Alright, so these were 3 important strategies that I would like to share with you guys, again because it gives you a lot of clarity in times where you are not sure where the market would give you another move, or even when you are sure that okay, my bias is towards the upside, but you still can't trade because you are not sure about where to enter, what your levels would look like, what your trigger would look like. All right, so I tried to give you some idea about that, some strategy around this, and that was probably it for this particular video. I'll keep on posting such interesting videos in future as well, so you can consider subscribing to this channel. And obviously if you like this video, make sure you like the video itself and share it with anyone who needs to learn about footprint or any kind of strategy. And if you have any questions for me, make sure you drop them in the comments and I'll love to answer them, or just join the live streams and I can answer your questions in the live stream itself. All right, so I stream daily at 10 p.m. and there are multiple live streams that I do, so it's around 3 p.m, 10 p.m. So I'll see you in the next video. Until then, bye.